All right, we're back. New update video. We didn't make a video yesterday. Long holiday weekend for those of you in the US. Memorial Day weekend. So we're back on Tuesday. So we'll make another video on Thursday still, back to regular schedule. So let's get right to it on the Bitcoin update for this one. On this video, we're going to focus on the daily, the 5-day, the weekly, and maybe just a couple tips and tricks for you along the way. And then, of course, car of the day and quote of the day at the end. So stay tuned to the end or skip ahead and just cheat. Uh, so let's get right on it for the daily. So our last video was a little bit ago, last Thursday. So right in here, right? The Bollinger Bands were pinching a little bit tighter. Anytime that happens, a bigger move is likely coming. Fortunately for us this time, we got to move to the upside. Unless you're bear, right? You're hoping for, much lower lows before we get a move to the upside, but no guarantees, right? Nothing certain in crypto but uncertainty. So we just have to focus on the charts and see where we're going next, potentially, right? Potentially. So what is step one? Well, we talked about in this last video, a couple of closes, 2 daily candle closes above the MA8 would be our first step. So today would be the first time that could happen. We want a close with conviction above the moving average, not flirting around with it, right? So there's one yesterday, right? Nice move yesterday, almost 8% out of Bitcoin. That's a pretty good day for Bitcoin. Now we're at the top of the Bollinger Band. So by definition, prices are high, but doesn't mean you can't keep going high, right? It's just a time to be more aware rather than just floating around in the middle of the Bollinger Bands here. So just because you're hitting the lower, the top side doesn't mean necessarily you have to move back the other way immediately. I mean, case in point, right? We were outside, right? You catching the drift? Okay, so we could do that to the upside. That would be great. Where could we potentially face some, pump the brakes moments at? Well, I'm glad you asked. Well, let's look back over yonder, right? Let's get our line here, right? So these are the just minor little, let's call them speed bumps, right? This low here, right? The low on the day, 32.9, so call it 33K. Bitcoin's could run into some psychological levels. So 30, you'll start to notice that at certain of these levels here. So 33K, the first kind of minor speed bump. Now these speed bumps will become larger if they are also coordinated at the same time with these moving averages. So this is the 50-day moving average here in the green, which you could see could potentially in the next couple of days kind of merge with that area. So watch that. Also, you want to just look at the wicks, maybe, but really the candle bodies. You want to look for a kind of cluster of candle bodies for get a bigger resistance zone as we move back to the upside. So what do you know? This closing candle is at 35K, right? The nice round numbers. Humans like psychological round numbers for the human mind, right? So the next level, right? They're starting to get a little bit bigger here. 37K, right? Look at how many touch points you got in here, right? Back in here, you kind of flirted with it, and you don't always have to have this definitive line. I starting to prefer more of zones, right? You kind of want to look at zones. So maybe you say 35 to 37K, or even extend that to like 37.5. Really, 37.5 is kind of the big breakout moment if Bitcoin's going to get moving in a bigger way, right? Until we're break free of this kind of resistance box, we can call it that, and we can color it yellow, or you can color it hot pink if you'd like, or purple, whatever you want. Yellow is probably easier to see for you, so there you go. So that's kind of our resistance zone, and you can obviously drag this out until we get above that. It's cautiously optimistic for this price action, right? As soon as you lose kind of a significant level that we basically been in all of 2022, right? So maybe you get something like this. We're going to look at kind of some forecasting ideas here in a moment. But you see how this level is, we held this for this whole time. We break it, and then you kind of flip back, right? And you kind of go back here and kind of retest that level. And it doesn't have to be that sharp like 35. So maybe we hit something in here and then go back lower in continuation. Or, if we really want to get really bullish here, we just simply need to break through this zone, and then we can get cooking in a bigger way, much bigger. Now, but more likely than not, the odds, right? That's all you have in crypto. Play the odds. I would say we kind of test somewhere in this area and then kind of go back down. And that will be the more important key moment in my mind, that if and when we go back down, right, we want to make a higher low than 25.3, right? That would be the biggest. And ideally, like I would say, you wanted to hit something like this. Obviously we wanted to just break right through it and go back to 100K, or right, $1 million tomorrow, right? Okay, but barring that not happening, a retest down at this level, if we can't hold somewhere in here, that would be great, right? 28K or something holds like that, and then we bounce and start working our way back up again, right? That would be a great scenario right there, right? And then you could start to see, people start to paint the W patterns playing out, something like that, right? But so the most important, my point here is, if we do get rejected initially, and I would say don't panic if we do that. It doesn't mean we have to go to 17K or something like that in the next week. That would be, we're still in par for the course so far for this kind of structure. So barring we don't make a lower low, right, if we don't come back down here and take out this is my alert right here, right? This is because if we cross this line, we're making a new fresh local lows. If we don't do that and we put in a higher low, that will be huge. And then we go back up and take out a high. So let's get a little bit cleaner here. So say we do something like this, and then we come back down, and then we do something like that, and then we take out this high, right? This would be the ideal scenario for the bearish sentiment to start to fade. You want to look for a dog barking. I don't know if you can hear that. My dog's going apeshit. Amazon driver or something. So let me get my train of thought back, because I have 3 dogs and they're all going bananas right now. So hopefully you can hear that, and I don't just sound like I'm a crazy person, more than normal. But so if this scenario happens, this would be perfect, because then you'd start to form a bottoming structure. So you put in your low, you put in a high, put in a higher low, you put in a higher high. This would be ideal for the bears to start to fade out a little bit and give the bulls a little bit, a foot in the door, so to speak. So that's just what to look for in the coming days and months. And you can see that, obviously this is, between 5 to 8 weeks away, okay, for something like that playing out. We'll know more and more as the days and the weeks progress, okay? So just giving you this for some what we'd like to see happening. So having talked about the daily, let's look at the 5-day real quick, because the 5-day Gaussian channel can be helpful in times like this. My dogs are still going berserk. This is the 200 MA on any chart, right? You can use the 21. I use the same moving averages on any chart that I look at. They're not going to change. It's just going to change the amount of moving averages that they are. So the 200 is holding quite nicely on the 5-day. The 5-day Gaussian channel has turned red. The Bollinger Bands, as you can kind of see here, have opened up, but we've kind of bottomed, at least temporarily, on the 5-day Gaussian channel. We're still well underneath. We are currently 17% underneath the bottom of the 5-day Gaussian channel. History, right, shows we can go lower than that. How about in here? And our lowest low back in 2018, how far did we get? We got way down here, right? 46%, right? No rhyme or reason that we'd have to do that again, right? This is one data point, right? And when it turned red back after the pandemic, we were already, well recovered. So we hadn't even turned red here. But just for S&Gs, let's see how far we fell. Over 40% there as well to the downside. So far, our biggest drop outside of the Gaussian channel on the 5-day is around 30, 33, 34% roughly there. So just food for thought there, and just showing you kind of a snapshot of what that is. We have some requests on to look at that. So now for the weekly Gaussian channel, just to briefly touch on, is still green, right? The only time it's really turned red in recent history, at least, is 2018, the bear market there. And even that lasted just let's take a measured move. Let's see how many days that lasted. 287 days after we turned red. So are we going to turn red? I don't know. If prices go down more, or we stay down here much longer, then yeah, because all it takes to turn red is a downward sloping, just any kind of downwards, right? We're kind of right at it right now. So we can prevent it if we get a price rally, and come back into this channel on the weekly, right? On the weekly. But the 5-day is really kind of the secret sauce where you want to be. But let me leave this on here for just a moment, just to show you kind of, remember that way back at the beginning of the video, we talked about 37.5, right? Let's look at an important key level here. If I can click the right one. All right, here we go. So 37.5, right? And that's kind of going to be the end all be all for support. If we start breaking 37.5, when we start seeing on the weekly, right? On the weekly, if we start closing weekly candles above 37.5 or this zone here, right? In the next handful of months, right? This is probably going to take some time, but this is going to be the biggest level on the weekly that we need to push through to get more bullish. Not to necessarily go back to all-time highs immediately, but just to turn more bullish than we are now. We have to get above this box. So why am I showing you this with the Gaussian channel? Because the bottom of this box around that 35K level, which we also talked about, is also the bottom of the weekly Gaussian channel, which is also coincidentally around the 100 week, right? There's a lot of moving averages coming into here. So keep your, remember that kind of box right here, right? Look at these candles, these weekly candle closes. This weekly candle close, the initial fall down here, that's where we bottomed out there before moving back up to the 200-day MA at 48K, right? So if we come flip back around here and you see all these, this is what you want to watch out for, right? This could just be a relief rally, and it should be considered a relief rally until proven otherwise. And how would we start to prove otherwise? Is you start to close above your 21-week EMA right here in this yellow. So watch this as we approach it, right? There's no guarantee that we even get this high, but if we do, right, this is what you want to start paying attention to in the coming weeks. This level right here, right? And all of these moving averages are going to start converging very closely to each other. That will act as more resistance than it would normally do. Okay, so here's your 8. That would be step 1. That's still at 34K right now, going down slightly week over week. Obviously, that'll change faster if we start to rally. But we've pressed way outside the weekly Bollinger Band, so maybe now we get at least a move back up to the medium Bollinger Band sign. So that's kind of what we did right here, right? We pushed outside the bottom of the weekly Bollinger Bands. See this in the light pink? And then what did we do? We kind of just flirted around till we hit, you guessed it, the median Bollinger Bands right up here. And then we didn't last very long, did we? And then we came back down, pressed outside again, come back up. Now we're floating around again, maybe for the next several weeks. Patience is going to be key in this market right now. So I know patience can be stretched thin and can go, you can stay at these prices for longer than maybe you're wanting to do so. But my point is, watch all of these moving averages very closely if we get to them on the weekly. Weekly holds much more weight than the daily or 3-day, right? Or 5-day. The weekly is much bigger. So until we're closing weekly candles above the 21-week, I would still be remaining very hesitant on getting too bullish, okay? Just throwing that out there. That's not my opinion. That's just a factual statement about charting and TA and Bitcoin. If you're not above the 21-week, right, name any moment in history for any coin that's not above its 21-week and looking real good, right? It doesn't happen, right? So your go long moment, you might miss out on the initial move, but if you're wanting to catch this, look how much more you have after it gets above the 21-week, right? You have plenty of move, right? If Bitcoin's going up another 65% after the 21-week, guess what altcoins are doing, right? That's also when altcoins will start to turn much more bullish, once we recapture the 21-week. Now, this is probably, ways down the road, right? And it's unlikely we do this on our first attempt. After, being bearish for basically going in a downtrend 62% over the past, 6 months plus since November, right? It just immediately turning back full bull mode, unlikely, okay? Usually it's going to take some time. So it wouldn't really surprise me at all if we just go back up, hit the 21-week, kind of mosey on back down, and try to form a bottom here, right? Here's one hit. Maybe we get another hit here. Maybe we get another hit down in, Q4 in October or something like that. And then we start to build again, right? Long drawn out bottom effects, right? Like maybe it ends up being something like this. Maybe it ends up being something twice as long, or maybe not, doesn't happen at all, right? Just presenting as much options that maybe you haven't thought of, maybe no one has shown you yet. So watch on the weekly chart when you start to see multiple moving averages and like your Gaussian channel, if these all start to converge at say 36.8, the odds of us closing above 36.8 would be very difficult. Okay, be very remote. Just gonna throw that out. So if you're waiting to sell some in a rally, and you see us pressing, for a week and closing right at a said moving average, 21-week Bollinger Band median, which is also the 20-week SMA. Those are the times that you need to think about at least putting in a stop loss in case we, sink back down a little bit here. So hopefully I'm helping someone out there and not just rambling endlessly like normal. So that is kind of what I wanted to cover today in the Bitcoin summary. But you can also look at shorter time frames to kind of get a leg up and maybe get something that maybe not a lot of people are watching just yet. But you see what we're seeing here, right? If you don't, you'll soon see. So there's cause for concern and cause for maybe some hope. The hope, the Gaussian channel on the 4-hour has just turned green, and you want to say, so what? Well, look how long that's been. It's been since right here, April, right? Late April. Now, also, you should maybe burn this in your mind too, right? We didn't turn green for that long, right? If we're going to have a rally, we need to keep going. If we come back down in the next handful of days, we would like to hold one of these moving averages, namely the 8, namely the 21, or how about just the top of the Gaussian channel, right? Those should act as a little bit of a support and resistance too, like a jello support, right? It can fall through, but just loosely, like your intestines, as gross as that is. I don't know. That's not even real. Intestines. Nothing goes outside. Jesus, that would be terrible pain. And just like this. So maybe it is a good analogy. All right. So my point is just you can zoom in a little bit, but don't put too much weight into like the 4-hour and the hourly. Okay. If you're a day trader, you can look at these, but that's very risky. So, but you can get a heads up, like I said, right? If we start to close under the 21, right, for more than a couple candles, which we haven't done in a couple days now, right? If we start to do that, maybe then we're due for a little bit more, of a pullback versus this normal stair stepping. So we're trying to build up here, right? You want to see that continue. If we start to close multiple hourly candles, then zoom out to the 4-hour. If we start to look bad on the, so far we're holding a resistance at that 200. So if we start to reject on the hourly, zoom out to the 4-hour. If we start to reject on the 4-hour, go out to the daily or the 12-hour, right? You can just, you start zooming in and then zoom out as needed, or, start way out and then zoom in as needed, whatever floats your boat. But the longer the time frame, the less risk that you have to your portfolio, to your money. So if you're in it for 3 to 5 years and you don't care, which I would recommend, then you'll probably be right as rain in a couple of years, right? If you're trying to make 10x your money in the next 17 days, you're probably panicking and doing who knows what all the time, right? You're just in a frenzy, right? So zoom out. When in doubt, I don't know, whatever. You got my drift. All right, so that's Bitcoin in a nutshell. Ask me any questions that you want to see for the next video. Leave me a comment down below. Let's go ahead and get to the quote of the day. We know this. John F. Kennedy, my fellow Americans, ask not what your country can do for you. Ask what you can do for your country. So a lot of people probably forgotten that along the way. We've all heard it, right? Hopefully, but it's good words to live by that I feel like very few do at this point. But car of the day, let's get to more fun stuff. The Ferrari SP3 Monza Daytona. SP3 Daytona, not Monza. I'm used to saying the S and the P's, and it's one over there. This is in the white. Good luck trying to get one of these. These are pretty rare. But there's a reason I'm showing you this. A reason I picked this. Maybe you guessed it by now. So there it is in red and white. I kind of like this one. What do you think? Red or white? Obviously red's textbook. Look at the mirror on the fender. Look at all the carbon. Yeah, that's pretty slick. Harder to see on the red. And then you got the rear. Look at the diffuser back here. Kind of Testarossa-esque, if you ask me. Pretty sweet looking. And guess what? Lego's coming out with one. Comes out June 1st. A la tomorrow. Just in time for Father's Day. Hint, hint, wife. She's not watching. All right. Maybe we'll build that and show that at some point. A little expensive, if you ask me. I mean, that could get you at least a lug nut on a real Ferrari. All right, I'll see you on the next video. Hopefully this helped you. Let me know what you liked best, what you liked least, what you want to see in the next video. That'll help me make better videos for you. I appreciate you watching so long. If you have, thumbs up, Twitter, Telegram, Patreon, all that good stuff if you want more content. I'll see you real soon.